This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil. Welcome back to Invest Like a Pro. So back years ago, as many of you know, that I spent a lot of time trading intraday. I did some trades off of the S&P Mini. I did that for a few years. And then I did a lot of individual stock trades on a intraday basis. So I learned a bunch from that. It was actually really important for a lot of the analysis that I've learned over the years, and I've also applied that to longer term time frames. Anything that I learned on those time frames really played a big role. And so one of the things, because intraday trading is so difficult, you have so much information coming at you, I think you have to simplify things. And I personally think when you're starting out with your trading, or if you're going through a period where you're struggling a little bit, I think you need to have a K.I.S.S method. Keep it simple and stupid, and just follow a couple of different things and a couple of different items, preferably something that you have written down, and follow that approach. And if that approach does not show up, you don't do it. We're in an environment right now where you can't just go off the rails and just say, hey, I'm going to buy this, or hey, I'm going to sell this or short this. You can really lose money very quickly and in the environment we're in. So I want to show you a specific method that I did on intraday trades where when there's so much noise coming at you and there's so many stocks to choose from, and you're seeing the economic data coming through, and you're trying to figure out, you know, what should I be doing here? You have to just focus in on a couple of key things. So let me just show you. I've got a 10-minute chart on the left and a 2-minute chart on the right. Now, before you guys start clicking away and watching a different video, so I'm showing you an intraday version, but this can be applied to any time frame. Okay, I still do it on the higher time frames. It's still an important way to simplify things. Okay, so I'm starting with the higher time frame 10-minute, and what I'm looking for is the 18 has slope. It has a slope to it. Okay, it's not flat. It's not just barely turning. It's not in the process of turning. Now, this was slope, but as I show you, it won't actually meet the criteria. But we have slope through here. Okay, this is the number one key thing. Now, you can have slope to the upside, or you can have slope to the downside. It doesn't matter either way. Okay, that is criteria number one. If you don't have slope, now this is in the time frame that you want to trade. So I want to trade off of a 10-minute chart. Okay, you might want to trade off of a weekly chart. You might want to trade off of a daily chart. That's fine. We're going to use this time frame as the setup time frame, the trend time frame, which means we have to have a trend. You have to have a moving average, an 18 that is moving. Now, as I've said, I prefer to have the 40 supporting evidence here, okay? But the minimum criteria is the 18 has to have slope, okay? So just to give you an idea, I want to actually show you something. So if we're just talking about an 18, and I'm going to show you this like that, okay? Now, when this is flat and you try and trade a pullback to it, your probability of winning is not very good. And I don't have the numbers, but let's just say it's like a 25% chance. I don't know. It's not very good. It's a low probability. Even here, as this is starting to lift off, you might be working up to maybe a 40% chance of being successful here. As you get up to here, it's maybe starting to increase a little bit more. But this is really the zone that you want, right about from here to here. Because if you notice, you're starting to accelerate. And look at how this is almost unsustainable, this speed. You almost want to look at it like a 45-degree angle is your best bet. If you can get if you can split a screen like this, and you have a slope in the 18 that looks basically like a 45-degree angle, and you're buying pullbacks towards that, or it could be the other way, 45-degree line going that way, you can short against it. Once the slope gets too vertical, your odds of success go back down to where they were down in here. You're going to start, the odds of success start to shrink again. So we're trying to catch the meat right here. This is the meat of the move. This is before it starts to accelerate, and where it starts to kick in and have a solid trend in place. So if a stock stays like in a 45-degree, so if we have a 45-degree line in the 18 and you just keep doing this and it doesn't ever get too far away, you can trade it over and over and over again. Okay, but the moment that line starts to go up like that, you got to be very careful about playing pullbacks to it. You know, you're going to want to be somewhere in here to about maybe down about there. And then once it starts to get too crazy, you want to start to avoid that. So if you notice, you know, just looking at this line, it's dropping down. It's really not bad. I mean, it's I don't know if you call it 45 degrees exactly, but it's pretty good. It's pretty solid. Now you can watch the 18 and the 40, and if they're both moving and they look they're dropping at about the same rate, then you're in business. Okay, you're in pretty good business. These are just about moving at about the same rate. So once I see that, I know I've got a potential trade. Now that's on this decline, and we're rallying up to a declining moving average because now we actually have a trend in place. We have an 18 that's moving. Okay, now this moves up. Now ideally what we'd like to see is higher low, higher low, higher low, kind of like what happened here, right? I mean, that's a perfect little rally. In this case, it went up and then it kind of went sideways, but it went sideways long enough, it got in the proximity of the 18, pretty close, and it created a pinch on the MACD. Remember, what the pinch is doing is it's working off the overbought condition, okay? When you get really far away from the signal line, you need to work your way back, and that's kind of telling you you've worked off the overbought. So we have that condition in place, and we also have strong ADX. For the purposes of this simple, keep it simple approach, the main criteria is we want the slope of these moving averages, especially the 18, to be moving in the right direction. What I prefer is to have MACD confirm the low and ADX confirm the low. Okay, if we have that, then we can look to trade on a move back up towards the 18. In this case, it's a short. Okay, now just so we're aware, let me just point this out. So these are the two trades. Okay, just so you can see, that's the rally. This is the 2 minute while this is rallying here, and on this rally, this is the 2 minute here. So in this case, as I've said, we've made a move to the downside and clearly made a lower low, and we got this moving average moving. Okay, it's clearly got slope to it, but it doesn't have too much slope yet. Okay, so that's key, and we have confirming evidence down here. Now, when we switch over to the smaller time frame, the trigger time frame, the 2 minute in this case, what we're looking for in this K.I.S.S method is a move where because at the time this drops on the 10 minute and is rallying back up, the 18 will be below the 40. Okay? There's just no way around it. Because you made a drop to the downside and you're starting to turn back up. As this is starting to rally back up, it's just impossible. The 18 on the 2 minute will be below the 40. So if this is a weekly chart and this is a daily chart, the 18 is going to be below the 40. Okay, so that's key, just to understand that. What we're waiting for on this time frame is for the 18 to cross above the 40. Okay. Now, there are times where it'll just come up to it and get close. In this case, I'm talking a really simple method. I want to keep it very simple. And what we're looking for is for the 18 to cross above. Okay? Now, this is very important because there are going to be all kinds of variations of these patterns on the trigger time frame. And I've said that from the get-go. From the moment that I started this channel, I said that the lower time frame is going to have different ways the way it's going to trigger. What I want you to do right now is focus in on one way. And if it doesn't happen, you don't take the trade. Okay, you just pass. Look, we're talking about a time where you're either struggling, starting out, or if you're crazy enough, trying to trade intraday. And if that's the case, then you have to simplify whatever it is. Either any one of those three things, right? Struggling early in your trading career or trying to trade intraday. Any of those three, this is my suggestion to you for keeping it simple. So I told you what's going on in the higher time frame. Lower time frame, I need to have the 18 to cross above the 40 on a short, okay? So at that point, I can't do anything until it gets to here. Now, what that's done is it's created a rally. You can't short this when it's oversold because we're waiting for the 18 to cross back above the 40. Well, for that to happen, you almost have to have a rally on the higher time frame. You have to have a 3 to 4 bar rally in many cases for that to happen. Now, once that happens, and we have actual close, so the moving average crosses, and we have a close above, then we have a setup in place. We have a setup on this time frame, and now this time frame has clicked in and is set up. So on this bar, on the close of this bar right here, we have a setup. Okay, let me just zero in on this so you can see it really clearly. That's the first bar where the 18 is above the 40 and price closes above both. Okay, now your fail safe in this, again, if you want to keep it simple, at this point is wait for a close below the 40. Okay, that's simple criteria. It can be once this happens, once you get a setup where you close above the 18 and the 18 closes above the 40 for a single bar, then as soon as we close below the 40, you have a setup. Now, one of the things that I would recommend is to look at what's taken place. We know we have a pinch. We know we have strong momentum here. Look at the strong momentum to the downside based on the sellers, and then notice how we have no strength in the buyers here. And also notice how this MACD made a higher high while price made a lower high. Okay, so I've got reverse divergence and a zero line reversal with no ADX. I mean, we've looked at this enough. In terms of keeping it simple, though, you could just wait for this to trigger. Now, what you could do based on what's taken place is maybe try and be a little bit more aggressive. And in this instance, you really didn't have much of an option. I guess you could have done it here and put your stop here because of the gap down that was as this was creating a zero line reversal. So you wouldn't have necessarily waited for the 40 break, but you saw it was starting to get going to the downside and you went ahead and put it on. So that is a potential trade if you know what you're looking at down here. But if you want to keep it really simple, and again, when I was going through a struggle period, I just kept it really simple, and then I kept the stop at the last peak. So if you notice, we corrected, we rallied up, and then we started back down. So this is the high of this whole area up here, of the last peak up. And you put your stop there, your entries in here, right? And then at 1-to-1, you take a profit and go to a break even. So 1-to-1 is whatever you risked. When you get to there, take a profit, say a third, okay? And then whatever's left, put it at a break even. Your other choice there is just to cut the risk in half, not put it at a break even, but cut it down to a level where if you got stopped out of the rest, you'd break even on the whole trade. Okay, so that's another choice. So I hope this isn't getting too complicated. I think this is pretty simple. We've got a trend on one time frame based on the slope of the 18 with supporting evidence from the 40. We have confirmation on the momentum, and now we've had an opposing trend pattern. This is a buy signal that fails. This is a 18 crossing above the 40. That's supposed to be a positive. That's supposed to be a buy signal. And now we're going to wait for that to fail because we know the bigger time frame is down. And once that fails, breaking the 40, we get short. How you handle the exit side is kind of up to you, but I would recommend at 1-to-1 do something. Don't take a full loss. If you put on a trade and you risk $1, and you're up $1 in the trade and you take a full loss, you end up losing $1 on the trade, on the whole position, then you're not trading very well. That is not good trade management. Okay. Good trade management is when if you get to 1-to-1, you should not take a full loss anymore. At 2-to-1, you should always take a profit. If you have a stock that you risk $1 on, okay, and it goes up $2 in your favor, you're up $2 in the trade, and you take a loss, that is poor trading. Okay, that is just, you should not be taking a loss if you're up 2-to-1. At 1-to-1, if you're trying to catch something bigger because you like what's going on, and you might only break even in that trade, but you shouldn't really lose much. Okay. So that's sort of trade number one. Trade number two is a little bit different, but same concept. Slope is still down. We made a new low here. We made strong ADX confirmation to the downside. We rallied up beautifully here. Now, if you notice what took place, this trend line is kind of borderline. I mean, I guess you could call that a real trend line, but more important to me, and this happened in both cases we did the same thing. And I want to point this out. So if we get the cross to the upside and we have our setup here, if we come into the zone between the 18 and the 40, just like we did here, and then come back out. So this came in and then came back out, and it tried to give a buy signal to the upside, and then it fails. You can get short here more aggressively before waiting for this, like this close here. Now, in this case, because of the way this played out and it was sitting on the 40, you might not have done that. But then right after that, you had a pinch that developed. Look at the pinch play right there. Notice we don't have a lot of strength on the buy side. So at this point, you could have done a pinch play. I'm giving you some more advanced stuff, but the simple way to do it is on the close here, you short and you put a stop there. Okay, we know we're playing for that. Now, one thing that I'll tell you on both of these trades, actually not on this trade because of the way it played out and how strong the momentum was, because this had a pretty decent rally off the low, you always want to take a profit before you get to this bottom, or at least near this bottom. If you haven't taken a profit at this low, so you get short here and it goes down to here and then turns around and stops you out, or worse, stops you out at your stop. That's not good trading skills. If your entry is here and you get down to this prior low, you want to be doing something. You either go to a break even if you don't want to take a profit, or you take a small profit, a quarter of a piece or a third of a piece. Okay. So these are really, I mean, those may be a little bit more advanced, but that's just more on the trade management side. But the simple way of doing this, and my suggestion is to follow this approach and do it for 20 trades and don't do anything else. And preferably stick with one time frame. Don't go jumping around to all these different time frames. Stick with one time frame, the time frame you want to trade. Go look for this specific pattern, and if you find it, and look for the opposing trend pattern where the 18 goes the other way in opposite direction of the trend time frame, and then look for that move where price goes in the zone and then comes out. That really increases your odds that you have some kind of a reversal taking place if it turns down and triggers. All right. I know this ended up going a little bit longer, but I wanted to cover this. I think it's very useful in today's environment. All right. Go ahead and post any questions or comments. Thanks.